Guys, today we have broken down on the daily and on the 4-hour time frame. We really need to sit down and discuss this current situation. The most important topic today is whether we are fully invalidating our journey into the top of the megaphone pattern, or if there's still a chance that we can go to that end. We'll cover the open interest, all the things that you cannot miss out to decide what's next. I'll cover what the whales are doing. We'll talk a little bit about the volume in this area and why is it so much important to understand what's next. Make sure that you don't miss at the end of the video. The liquidity analysis is quite revealing what's going on at the moment. Guys, if you like this type of content, make sure that you're subscribed to the channel. Hit the notification bell so you get notified every time I put out one of these videos. We continue to get over 100 likes in every single video. Thank you so much, guys. That is amazing. Even though the price is dumping, which is typically causing all the people to watch less videos, to get disappointed, to drop the towel, you guys are still here, and I continue to support you guys as a way to say thank you for all the help that you're giving to this channel. Let's get started with the 4-hour time frame. Yesterday we were looking into this breakout and we were explaining what needed to happen for continuation to the upside. And neither of those conditions had been met, starting with the fact that we broke down below the CPR monthly levels of September with this candle close in here. Later in September, we're going to be looking into these prices of 57.2 to 58.4 as the challenge that we need to break to be able to turn back into bullish. It's worth mentioning as well that with this previous 4-hour candle, we have already broken below the trend line. Only 2 days ago we broke above it and now we are back below it. And I clearly stated that we didn't want to do that. The current 4-hour candle seems to be going back down to where the wick is placed, which is telling us that there is liquidity in this area still remaining to be grabbed. And I'm going to show you later in the video where that liquidity is and how intense, because that's going to give us a hint on whether we are in this area just to grab that and then bounce back up, or if we are definitely going for the 54K. Make sure you watch the full video. When we look at the RSI 4-hour, we can see that with this red candle in here, we broke below this internal support and we have broken as well below the global support on the 4-hour. But there's something that is still holding here. I cannot guarantee for how long it will hold. Is the fact that the RSI at the moment is putting a double bottom at a level of 31 on the 4-hour, whereas the price is making new lows, and that is a bullish divergence on the 4-hour. But let's not overestimate the bullishness of that. Let's look later as well at what's the liquidity below it. We don't want to be one of those traders that enter on the first bullish divergence without any confirmation. And looking at the daily, bad news, guys, because we have broken not just below the trend line, but so far on the daily, the RSI is putting a new low. Of course, we are still very early in the day. Today is 4th of September. It's 8 AM UTC. So there's plenty of room potentially for the daily to recover above this support. The right thing to do when it comes to daily trades will be to wait until candle close. So I think that even though from here it's still possible that we can go to the top of the range at an RSI of 53, 54, 55, the likelihood of that in the short term has been reduced. We will talk as well later in the video about the general markets and what is currently dragging down Bitcoin. But before that, let's look at 53, 54. Where is it located in the price? Currently, 53 is now 61K. And if I look at the daily time frame, we could argue that if the price today, with the hours that are left of Wednesday, if we were able to get bought aggressively here, back above 57.1, which is the line in the sand that I gave you yesterday, we need to close above that. If we are able to just live here a week, similarly to what happened in here, we're still a red candle, but we are wicking into 55.9, and if here we go just slightly below, but we close above this white line, then there's nothing stopping us from going in this direction. I have to admit, the price action in here is getting really exhausted, and we have plenty of liquidity right below us. So there's a lot of stimulus for the price to go even lower, but I'm just pointing out the fact that if we were able to grab the liquidity in here very quickly and get bought up back again above 57K, then this will become literally a liquidity grab ready to continue our trajectory to the top of this infamous megaphone pattern. And just a reminder, the largest liquidity in the highest time frames are these boxes. We have some liquidity at 54, we have at 67, but nothing compared to these boxes that I'm showing you here. And in case we get a really strong black swan event, we also have extreme levels of liquidity at 30K. Looking at the open interest, a few days ago I gave you a hint. This area in here of 15 billion has been in the past 6 to 7 months the sweetest spot for a reversal to the upside. You can see here that we go 11% up, here we go 30%, you get the point. So we have a chance here to see some sort of bounce, but the bad news is that if we lose this 15 billion, just like we saw a very fast journey to the upside in here of the open interest, we could as well make a very fast journey back into the 10 billion. And that definitely can be interpreted as a full-on capitulation. If you look at where is this open interest before, starting from 11 billion to 6 billion, that is all this price range in here. But let's not get too heated. That is only subject to a black swan event. That is only subject to the S&P and the Nasdaq making a huge correction. Big wallets continue to withdraw from exchanges. Similarly to the argument I gave before, this shape that we have here for a path to the top, the yellow trajectory, is still not broken in my opinion. We are right at 55.8 where we found support before, and there's nothing saying that we cannot do that once again, being open-minded in here, and the structure looks still healthy for a bounce. Of course, that can change anytime if we start putting a low in here. That will make things a lot more scary, but we know in this area in here, there's the largest level of liquidity below the price. If we look at the volume, you can see that this capitulation in here made a huge spike in terms of volume. We can also see it in this wick right here, which went way beyond the average of the volume. Only this, the 27th of August, had slightly beyond the average in terms of volume. But what we are currently experiencing so far, it has not been able to reach beyond the average. And that's an indication that the selling doesn't have the same power that it used to when we were on the 5th of August, on the 5th of July, and on the 24th of July. And we are on Wednesday, and the candle is pointing down on the RSI weekly. I am really hoping that by the end of the week, we are at least pointing towards the resistance at an RSI of 51. Currently, we are at 45.8, and I remind you that crossing below 40 on the weekly can make it really impossible to repair the damage to continue in a bull market. In order to get to RSI 40, the price must close below 51K, so we are allowed to go within the same week very quickly and fast to 47, 46, punish all the longs, and then close the weekly candle above 51K. And if we could do that, that will be incredibly bullish in a similar move to what we have on the 6th of March here. We just go, we punish all the longs, and then we are ready to move on to a higher level. Interestingly, the Fear and Greed Index has printed a higher number today, even if we are seeing lower prices. I ignore how they calculate this, but this is a mild bullish divergence, meaning that people are getting less scared even if we are crashing. And let's have a very quick look at the general markets. The market erased $1 trillion with just this move that we are in here. And one of the things that has my alerts switching back on is the fact that the VIX, right after we did this week into 65, crashed in here, the Japan 225, we started seeing the volatility index spiking once again above the triangle. And I remind you that I've been quite concerned on the price action of the volatility index. And I'm going to remind you why I was concerned. I'm pretty sure that I have repeated quite a few times in the past videos. In this area in here, we were expecting a breakout above the trend line, which should come with a market crash. And we did do that, but then we went back inside the triangle. And being inside the triangle, to me, it was telling me that we are not done with the massive volatility and that we should be expecting some replicas, not necessarily that we're going to go higher than 65, but at some point it's telling me that we are going to have something of similar proportions. Why am I thinking like that? Very simple, because when you break out above trend line like this, for example, on the 20th of October of 2014, and you go back inside it, what you should be reading is that we are not done with the breakout. We're going to have another one. And in here, you can see on the 8th of December that we start having some violent volatility once again. You can also see that in 2017, after this all-time high, when we have this spike on the VIX, that happened at 8K. Right after that, the price went to 11K, but then we enter a bear market. I'm not saying that I'm 100% convinced that it must happen in the same way, but I'm telling you to be a little bit on the look for some additional volatility coming in September. And just a quick look at the dollar index, which is doing precisely what we were expecting to see, which is a move towards the resistance. Right now is in the red. I'm hoping that we don't come back inside this range in here, because that will mean that once again the dollar is mildly strong and in here is extremely strong, pumping, if at the same time we get a dollar pumping. In fact, what we need is the dollar to find somewhere in this vicinity resistance, rejection, and then further continuation to the downside. And yet, since a couple of days, I've been saying that we have this red candle in here and that there is a good chance that we break down below this trend line. Even if we recover in here, we couldn't manage to put a high. We left a wick in there, red candle, testing the support very mildly, and we get the breakdown. We are halfway the week, so I'm not claiming victory yet because this could get bought up and close above support, true, but I can see the weakness on the RSI right here. We broke the support, we went back inside, and we are breaking the support once again. So this is kind of calling for a move in this direction. And why is that? Well, in general, all stocks did really bad yesterday, but all the spotlights are going into Nvidia that erased, I believe, like 300, 200 and something billion in just a single move. That is the largest loss on a single asset in history. That's what you're seeing in the chart in here. And we can pretty much admit that all the bullish that we are getting on the indexes is coming from this move of Nvidia and everything to do with AI. And if Nvidia starts putting a top in here and retracing heavily, that's definitely going to drag the S&P down, which, by the way, is currently in the process of forming this ugly double top, which is not yet confirmed because unfortunately the neck is at 5.1K. So in order to complete the double top, we need to do something like this, and then we get it. We knew that we were putting bearish divergences on the RSI. There's a large one in here, and there's a smaller one that is not being shown by the indicator yet, because once again, this candle in red that we are seeing there is still not settled. And by the end of the week, we could see still a green candle and invalidate partially this bearish divergence. I think the bearish divergence is there to stay. It's going to be very difficult to get to an RSI above 78, but I'm not going to get ahead of myself. We are 2 weeks away from a rate cut with a high likelihood, so we'll see. So congratulations if you have made it until here in the video. If you did, make sure that you write a comment telling me if you agree that there is a high chance that we go for the lower liquidity. And let's now have a look at what is that lower liquidity. Looking at this from the distance, we got the 67K liquidity, we got the 54 liquidity, but let's zoom in, let's remove from the visible area the largest chunks, and let's focus with what's immediately next to the price. We can see that this week that we have there took all the green liquidity, and new orders were placed on the 1st of September that were responsible for pushing the price almost 5% up, but those stop losses are still there open and ended up attracting the price, but this dump in here hasn't yet managed to take it full. Currently, we have this candle open in there. It's a 4-hour candle, and it seems to be on the way to take the remaining part from 55.6 to 54.8. If we zoom out, you can see that area now turns just into green, and that is because the 54 to 53.2 is relatively larger. And if you stay with me here, you're gonna see that there is some green and some blue, and if I drag this a little bit higher, it turns into nothing. That is 53 to 54, and that shows you how much larger this liquidity is at 46 to 47. But as I mentioned yesterday, there is no guarantee that we can make it that low. Even if it's looking like we're gonna go there, don't get tempted to get tricked by market maker. You can have a lucky guess for sure, but the last thing I'm gonna do is to set my single order to buy in here. In fact, I'm already in a position and I'm looking to buy next at 54, followed by this area in here. And if we focus above the price, we have the 67K. That is not a surprise, I have mentioned it. We have 61.4 and 64K in here, but they are all mild relative to this. Fair value gaps, we have a full wallpaper here of fair value gaps to the top. I wouldn't like to enter a short right here because yes, true, there's a lot of bearishness, but just focus on how many fair value gaps we have below and how many we have above. And there's a huge vacuum from 56 to 47, pretty much 10K of no fair value gaps, at least from 4-hour time frame and above. And I'm gonna cover the buy signal that we talked about yesterday. Even though I explain how I run this strategy, I'm sure that many of you are disappointed that we got the buy signal on the 2nd of September, and right after that we started selling off. And for that, I'm gonna answer just by zooming out. You're welcome to take a screenshot and see how would you have run this strategy. Personally, I'm very satisfied with the performance of this in a bull market. There's only a few exceptions in all this range that you're seeing in the chart where I can completely agree that it wouldn't have been great to buy. For example, we got the 9th of November that you get a buy signal, and that's the actual top. Why would I buy there? So if you use your criteria and do not automate this strategy, you wouldn't have. Why would I? But if you're buying in this area in here, that's the bottom of the market. And even during the bear market, this buy signal pretty much always bounces back to the upside. Not always as much as you want. For example, in this area, you bounce 13%. And then after this drop, you get a signal here, and that's the bottom of the market. It's just great. Continue going into the bull market. All the signals are profitable. If you wonder how to set them up, you need to create a chart on high block capital. Of course, you need to have premium account, and then you search for indicators, look after global longs and shorts accounts Binance, and then use these settings, longs, filters one only, 70, and then I just manually placed a line at around 70 to show me at which points we have too many longs. If we focus on this recent area, I told you that if we go back above 70 in here and we start dropping once again, if we cross back below 70, we're gonna get another signal. Hopefully that's gonna be very close to 54K to help me averaging down my current position, which is currently at an average of about 59, 58K. We got a very great combination here forming. We have the bid and ask ratio in the green. We're about to print a buy signal from the global longs and shorts, and the funding rate is well in the negative, which is also bullish to start looking for a long, not necessarily to enter right now. And the alts are right at support at 44 in this channel on the RSI, which is basically the last line in the sand for the alts to break down below the full bull market's support trend line. I'll keep you updated if that breaks. Guys, I'm currently hosting a position airdrop on Bybit. You trade with $100 and they give you 500 additional to trade on any of the coins in this list. There's a link at the top of the description that you have to click to activate and to see the instructions. There's also a link in the description to open a new account and unlock up to 30,000 in rewards. You can use your Bybit account in my website to not have to pay any subscription. Zero price to pay for any of this as long as you're trading on Bybit and you have the required volume. That will give you access to over 100 different indicators that I have built over years, including indicators to navigate the market, to backtest strategies, and a lot more. Yesterday, we have a huge announcement. We have a new AI sentiment pair selection criteria in our bot assistant. You can use it, for example, to pick the top 5 AI sentiment most bullish coins to trade on 3 Week Hunter, Ganium, or Alt-Ready. You could also use them for shorting by using this sentence. Here there's another interesting example, the top 10 AI sentiment having market volume relative to market cap above 20%, which is a great alternative to filter the ones that are bullish, but they are showing enough market volume as well. You can also combine them, like for example in here, the top 10 Lunar Crush Alt Rank having an AI sentiment over 32%. These are just arbitrary numbers. We are currently using blockchain data, exchanges data, TA indicators, longs versus shorts, and a lot of information to compute this particular criteria of pair selection, and I'm sure you're gonna like it. I'm currently testing it with some bots. Hopefully in the next months I have some great results that I can show you in a video.